there, Maverick traders. It is March 14, 2024. Tomorrow we have March's monthly options expiration. It's going to be an exciting day tomorrow, so let's jump into it. In this session, we're going to go over what happened today, looking at some of the news, had a really hot PPI report, and then we're going to look at the market and say, has anything changed? We're going to take a look at the market internals. That's the big story for me today. I'm definitely going to be going through that. And as always, we're looking for trading setups, and I got to say, it has gone from being overwhelmingly way more good bullish setups than bearish setups to way more good bearish setups than bullish setups. So I got a couple bears for you today.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, today we had a down day. Now, I don't want to get too crazy. I don't want to put too many ideas in people's heads. But if you take a look at the numbers, the Dow was down a third of a percent, the S&P down a third of a percent, the Q's down a third of a percent. This is not a big deal. Not a big deal whatsoever. Take a look at this Russell. This Russell is down almost 2%. Sorry, I did not update oil and gold. Oil was up 1.7, gold was down 0.6%. But look, I really want to focus on the news, and I really want to look at the market internals. We got a PPI report that was much higher than expected. Headline number was plus 0.6. Expectations were for plus 0.3. The core was up 0.3, expectations for up 0.2. So this was a much hotter than expected number, and the market really shrugged it off at first. And it tried to rally and it fell, and then we tried to rally again and it fell. We did rally a little bit at the end of the day, but I really want to point out how terrible the market internals were. Take a look at these numbers. 80% of stocks went down. So 4 out of every 5 stocks went down today. And if we take a look at how many stocks are above the 50, below the 50, this number has been shrinking lately. So as the market has been going higher, this number has been shrinking, which tells us all we really need to know, and it's about the heat map. If you take a look at this heat map, we will take a look at this heat map here in a second, but I really want to take a look at the market, and we'll get into that heat map because I think that's really telling the story here. So here we have the S&P, and if you were just looking at this saying, okay, we have broken higher and we basically high based here. That's basically what we've done. That's it. Just basically high base. That's it. That's all we've done is high based after a high base over here. So high base here and then high base here. And you can see a long lower shadow. We recovered today. Again, this candle doesn't really tell us anything whatsoever other than, hey, it can't go higher. It's tired. But when it went down, the buyers came back in. This is really all the tool. So the S&P still looks wonderful on a chart. We come over here to the NASDAQ, and all of a sudden, we're not seeing things as good. Yes, we're still basing, but we are now really moving to lower highs. The S&P was at least matching highs, if not going a little higher. We now have some weakening here in the NASDAQ. Now, if we're taking a look at this market, and we come over here to the heat map, let's look at today. So today, if you just looked at the headline number, down a third of a percent. Big effing deal. Sorry, I shouldn't have said that, but big deal. Okay. But when you take a look under the hood, look at what happened today. Microsoft, Apple, Google, Amazon, all bullish. Do you know how much that hides the weakness in the overall market? 4 out of 5 stocks went down. And these 4 big companies are probably about 25, 28% of the entire S&P, and they had up days. So I really want to point out that it's masking the real sell-off that happened today across the board. The other area, take a look at energy. Now, I've been becoming more and more bullish on energy, Energy looks awesome. Awesome. Oil is finally above the $80 for the first time in months. Oil looks great, and you can see pretty much solid green across the board. I really want to talk about how this market is actually deteriorating under the surface much more than the averages say. So we just took a look at the S&P 500, and then we also took a look at the NASDAQ 100. So what else is happening out there? Let's take a look at the small caps, and then I'm going to do a mid-cap ETF, really to show you what's really going on under the surface. Let's take a look at the Russell here. So you can see that this Russell has really broken. This point that was some support, this Russell's broken. Now, yes, we got some buying at the end, but we're below the 20-day moving average. So we're looking at the first warning sign that the bull market is over in the Russell. It's now flashing a little bit of a caution signal. The NASDAQ is about to flash a caution signal. The S&P doesn't even look like it's about to do a cautious signal. And let's take a look at the total market ETF. So I'm going to use the VTI, that's the Vanguard Total Market ETF. And you can see it looks a little bit more like the S&P. It's holding in there. I just want to be pointing out, there are some issues. We can't just jump bearish because the charts that we look at, which is the S&P and the Qs, have not told us to go bearish yet. And we can't all of a sudden, at this moment, start looking at different charts to choose different charts because the charts we looked at aren't looking the way we want them to look at. That's not what I'm saying. But what I'm saying is, I think there's enough information out there to take a look at these +3 markets. And they're clearly +3. So the S&P, it's clearly still a +3 market, but we could be a little bit less bullish. And if you've been listening to me over the last week or two, I have been becoming less bullish. And again, these things are building up. I still think you have to be leaning bullish, but you don't have to lean as hard as you were. I know I just spent a lot of time on this. I'm going to be spending a lot of time on it this weekend when we do the trading room. But I wanted to point this out because I do see some more reason to get more defensive. But with that being said, guess what? It's a +3 market, so you still have to be bullish. You still have to be bullish. If you remember on last weekend, I called for this to be a down week, to be a -1 week. As far as right now, it's actually a positive week in the S&P, negative week in the NASDAQ. We'll see what happens when it closes on Friday. But let's take a look at some trades.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
As I told you, I found way better bullish or bearish setups than bullish setups. There's still some decent bullish ones out there, but it's mostly in energy. Like this is all energy. FTI, FMC, CNQ, NRG. These are in OVV. Those are all energy stocks. So out of these 9 that I just showed you, like 6 out of the 9 are energy stocks. So I still like energy on the long side. Let's take a look at 1 neutral and let's take a look at 2 bears. There are some absolutely stunning bearish setups out there. This is a sideways play. This is ALK. This is Alaska Air Group. So in the industrials, it's one of the sectors that we think is still more bullish than anything. But you can see that this stock really can't get out of its own way. For the most part, it's trading between 35 and 40. There is a strike at 37.50, so I think that's where you want to put your butterfly. You want to do the 35, 37.50, 40 butterfly. which means that this is going to be your butterfly and your profit area is going to be pretty much in here. This only has monthlies, so you will need to go out to the April expiration. That might be a little too long for some, but if it fits, this one looks pretty decent here to go sideways here for the next little bit. Let's take a look at some shorts. Here is Chewy. Now I'm not a huge Elliott wave person, so please don't take this as an endorsement for Elliott wave theory. But I really love Elliott wave theory because you start thinking about stocks moving waves. It's very, like when the stock's running up, you know that at some point there's going to be a turn, but if it's a wave one, you want to be a buyer. And you know that wave three a lot of the time is the biggest wave, so maybe you'll be a little bit more patient or have a little bit higher target. Again, I'm not a huge proponent of all of the stuff in Elliott wave, but I love the idea of looking at it in waves. So if you take a look at this chart, this is wave one to the downside, this is wave two, this is wave three, which most of the time wave three is the biggest. Wave four is typically a base. And then wave five is the exhaustion. And then you get a ABC correction. A, B, C correction. Now, a lot of people call this correction a bull flag pattern. Or sorry, this will be a bear flag pattern. And they're exactly right. So a bull flag pattern will do this. It will go up and then it'll have a really lazy downtrend and then break out to the upside. So this is just the opposite. I like everything about this setup. Rallied up to the 50-day moving average. Could not go above it. And here we are. We're falling. I like this one all the way down to 16. If this market turns and we turn into a plus 2 and then to a plus 1, this looks like it's headed to 16 for me. So this one here, a 16-18 bear call spread would make a lot of sense. I'd probably go out 2 or 3 weeks on that one. My next short, Upstart Holdings. Upstart Holdings. And again, you see the same thing here. Big fall. A, B, C. Let's call this a bear flag. Breaks down. This one looks like, to me, if the market holds on, I think you want to be at a target of like 22. If the market turns over and falls beneath moving averages, I think you want to be down at 20. Based on what you're looking for, based on your allocation, you may want to do a 22, 24 butterfly. If you're looking to 20, just straight long puts, probably the best way to go. Or if you want to do a spread, do a 20-24 butterfly. That would give you plenty of negative delta on this trade. So let's talk about tomorrow specifically, just tomorrow specifically, and then I'm going to be walking you through the trading room for next week, but just tomorrow specifically. We do have monthly options expiration. Based on how we traded today, I think tomorrow is likely to be sideways to down. We did get a little rally at the close of the day to bring the markets back up, but it happened in like the last 10-15 minutes. It looked a little suspicious. And again, these terms I'm using, a little suspicious, it's all something I've dreamed up in my head. But we were weak all day long and then got a little pop at the end of the day, where we would have closed on our lows if they closed the market 25 minutes early. We did get that little pop. We can't ignore it. But today was an ugly down day, 80% down stocks. I think that carries through to tomorrow, but is it an ugly day? Is it a really ugly, nasty day? Probably not. Probably not. I think we get, maybe about the same move down, another 0.5%, 1/3%. And then I do think next week we could see continued selling into next week. But just talking about today or tomorrow, I think we're going to have a slightly down day. So keep that in mind for any expiring options positions. No real big economic reports and earnings reports. Always check your earnings just so you know that the positions you have or the things you're trading have earnings. And if they have earnings, make sure you know that and are situated to where you don't get hurt by a move against you, or some traders just like to avoid earnings altogether. Well, that is it for me for a Thursday. I will be back talking with you tomorrow in the trading room. Goodbye, everybody.